What's up, guys? How you guys doing today? So we're back again on a different episode, a different topic, a different page. You know, every time we get better. Every time we get better, and to get better, I will stay on track, stay on purpose, stay on course. So today we're going to talk about changing the pin bar candlesticks with a trend. Remember last time we spoke about pin bar candle strategy, if you remember, and trading statics. So today trading the pin bar candlesticks with a trend. Okay. If you are a beginner trader, and I highly recommend you to stick with the trend because pin bars that occurs in the trading market offer good trading opportunities with high risks, with high risk reward ratio. When you master trading, it will trading with trading with trading it with the trend. You can then move to the trade bounce market or even counter trends. This strategy is simple. You start by identifying a clear uptrend or downtrend and you wait for a pin bar to occur after a pullback to support or resistance level. See example below. Right after I break down this point of this level here, just come back and retest. So by retesting, it came and give us an like a how they call it, like a confirmation, like one of the confirmations, because you can't just rely on one confirmation and say that's your trade. Nah, you have to rely on so many confirmations. Like a spin bar, it's one of the confirmations, you know, before it went down this way, if you know what I mean. This below shows how the price action signals works if it's traded with a trend. As you can see, the price was rejected from the resistance levels, which indicates that the bears are still in charge of the downtrend. The formation of the pin bar indicates the end of the retracement move and the beginning of an impulsive move at the resistance level in the line with the downtrend. This is a high quality setup because all the following criteria are respected. The pin bar is well formed and it is in the line with the direction of the market. The rejection occurs in a major key level, which represents a hot point in the market. The risk to reward ratio is good and it is worth trading. You hear what I mean? And yes, I like this one as well. Talk about this before continue reading. If I advise you like in trading, if you see a trader is the risk to reward ratio is actually quite good, you have to take a trade, because in trading you must actually lose something to gain something. Even right now, if you go to the shop, right, you take a £1 to buy a bottle of water. Remember, you're losing the £1. You're losing your £1 or your currency, your money to get that bottle of water or get that food. That means there's an exchange there in service. If you get what I mean, one person is gaining money, one person is gaining services. So in everything you do in this life, you must gain and you must lose. You have to learn that even sometimes you have to lose in the minority, so that you cannot just die for that day. You can keep going for the next couple of months, right? So it's good to have a good risk to reward ratio. As for me, 2% is my risk. I risk of 2%, 2% or 1%. Sometimes 1.30%, bro. Like 1.30%, 1.30% I'm wasting. Sometimes if it doesn't go, even if it's a perfect trade, it's all right. It's all right, man. I even lose the trade, but I've just been in a trade and in a losing trade for a couple of days, waiting for it to come back up. Nah, you have to just go out. But let's continue. Sometimes even in the market is trending, we can't draw support and resistance level because prices move in a certain way, which we can't spot static key levels. If you're in a situation, you can use the 21 moving average which will act as dynamic support in an uptrend market and dynamic resistance in a downtrend market. Okay, you can see the moving average. Okay, before we talk about the moving average, let me say something, because this channel is about what I was doing in my trading style. So I'm trading for some time, and during my first years of trading, I was trading indicators, right? But right now, I'm trading indicators, man, just pure price action and market structure. Simple. But right now, but back in the day, I used moving average, I used moving average, EMA 240, 60, moving average. What else I used to use? I used to shooting star, pattern, something. Bro, I see so many indicators in the way that even oscillators. I see so many indicators that I ask myself, man, they're getting more confusing. So I just stick to what I have to know. So, in trading, let's just continue. I'll talk about this in the end of this chapter we're talking about. So 21 moving average act as a resistance level, right? And a pin bar signal in the line downtrend. So say resistance is when price under a line and support when price above the line. Simple thing to just know. As you can see in the chart above, the market was trending down. Using the 21 average helps us identify dynamic resistance levels and high probability pin bar setups. See another chart below. Uptrend 21 moving average pin bar, right? So therefore our chart above illustrates how a 21 average could help us find key points in the market. When price when price approach the moving average, the buying pressure takes place in the market and the price goes up. The pin bar signal is clear on the chart because the trend is bullish. The price action setup has a bullish autonomy as well. The price action setup has a bullish autonomy as well, and the rejection from the 21 moving average is a confirmation signal to buy the market. Okay, we're moving up, man. Very soon we'll finish this book like a joke, but we'll take it serious like a joke, and we're making money like a joke, and now we're becoming free like a joke. So trading statistics. When we identify a trend, uptrend or downtrend, and the level support resistance, you can find a pin bar near these levels in the line, the direction of this trend. The second step is to know how to enter the market based on this candlestick pattern. According to my experience, there are different entry options when it comes to trading in pin bars. It all depends on the candle autonomy, the market conditions, and your money management strategy. The aggressive entry option. This method consists of entering the market immediately after the pin bar closes without waiting for a confirmation. Strategy will help you catch the move from the beginning because sometimes the price goes higher after close of the pin bar, and if you are not in the market, the trade will leave you without you. Trade will leave without you. You get what I mean? So look at this setup down here. Support becomes resistance, if you know what I mean. Because the price break here, that's why it becomes resistance here. The entry after the close of the pin bar here, and stop loss above the pin bar formation a little bit, and start going down. This is a good risk to reward ratio market to enter, right? What I mean, okay. The chart above it, the chart above shows an aggressive entry could help you to educate your trade in the right time without being left by the market. And as you can see, we took this trade because we had three important elements. The trend, the market was trending down. In this case, we can look for selling opportunities. The level, in this chart, we had a support level that becomes resistance. the signal. A clear pin bar was formed after a retracement back to the resistance level. When you have these three elements in the market, you just place your trade after the close of the pin bar and your stop loss above the long tail. The profit target will be the next support level in the case of a downtrend. These three elements are quite enough for you to find probability entries in the market. The conservative entry option strategy consists of entering the market after 50% of the range bar retracement. Strategy continues. Strategy sometimes will work and gives you more than 5 for 1 risk ratio. And sometimes the market will leave without you selection below. So let's see what they said about. Strategy sometimes work and it will give you more than 5:1 ratio. Okay, see. Alright, you can see this chart. See downtrend, market resistance level, downtrend, 50% pin bar retracement entry, stop loss. So you can see everything is there in the chart. Okay. The shown above give us an idea about the power of consistent entry. As you can see, the entry method help us decrease our risk and increase our reward. The trade above has more than 5:1 risk to reward ratio. One trade like this every month is quite enough to generate a decent income. See the chart above. See the guy says that the guy that was this book say one trade like this every month. It does say every week, say every month, one trade. So you have to you have to just find one trade that you can just have a good probability on that trade, even one or two trades in that month and just trade. That means less is more, if you know what I mean. So one trade like this every month is quite enough to generate a decent income. Decent income, if you know what I mean, even though it's about trading. So let's continue. All right. Support becomes resistance, So because it's an uptrend, right? And we said when price is below the line, that means support. When price above the line, resistance. So 50% pin bar retracement entry, stop loss, perfect entry, perfect risk reward ratio. Okay, one of the drawbacks of this entry option is that the market sometimes doesn't retrace to 50% of the range bar, which will make you feel frustrated because the market will move to the profit target without you. There is no wrong or right option. They both work great, but with screen time and experience, you'll be able to decide whether to trade aggressively or conservatively, something like that, if you know what I mean. All right, trading pin bars with confluence. Right. Okay, let's leave it like this. Next week we're going to talk about trading pin bars with confluence on next video, if you know what I mean. So before we go there, let's talk about some couple of trades and some give my own insight about trading. Because everybody needs a bit of his assistance, if you know what I mean. All right, let's go to the weekly time frame, right? So basically, before I enter a trade, right, what do? I go to the higher time frame, try to look for what trend it is, what the market is going. Is it looking like an uptrend, looking like a downtrend? All right, cool. I see like the market is going uptrend, if you know what I mean. Why I say going for an uptrend? Because the market have tried to break a new high zone, if you know what I mean. Look at this, look at one higher high, wait, this lower low, higher high, lower low, higher high, lower low, higher high. So basically we're making a higher high here. So go on daily time frame, right? Sometimes I always try to put my own setups, but the market gives setups for you to trade. So just take them and just go with it. The market will lead you. So the daily time frame, I come on the daily time frame, try to look for the daily candle, what on daily time. But the daily candle shows yesterday daily candle was kind of bullish, showing that today might be bullish or tomorrow might be bullish because it's showing this platform. Showing the candle is a big bullish candle, if you know what I mean, and it's a break of structure around here. Market is going up, if you know what I mean. So in a 4 hour time frame, what do? I look for my key zones where I can actually get a place where the market can come on, just tip and go up, like areas of mitigation. Mitigation. I don't know if you know about that, guys. Areas of mitigation where market can mitigate and start moving forward, if you know what I mean. So basically, I was thinking the market was gonna go down, but it came here up, came here, give us an entry and came back down. So came again, thinking it's gonna go down. So just playing around the price. So I was thinking that I'll come here and take it down again, but it looks like the market gave me some profits and took me out of the market because I was going back up. So in the 4 hour time frame, look for my key zones if you know what I mean. If you see that key zones here, you know, so key zones, you know what I mean. So in 1 hour time frame, I try to see what I can do in 1 hour time frame. In 1 hour time frame, let's see like what is going on the trend. So trying to find some liquidities in the market in 1 hour time frame or 4 hour time frame. If I want to find some liquidity, just got to go. So in the 1 hour time frame, I see that the market is trying to move up because it has break the structure, you know, and I feel like it's like a pin bar down here, right? Because the market came out, it broke here, came out retest around here, if you know what I mean. The retest around here, retest around here, if you know what I mean. It's because the market will retest in places where it finds the candlestick is single formation, if you know what I mean. And in 15 minutes, the magic time frame, right? That's where I take my entries. 15-minute time frame, I take my entries, I get my stop loss very tight. I make sure I have a very tight stop loss when I'm entering the market, if you know what I mean. Because I rather lose my trades than I lose a tiny bit of my profit and losing all of it, if you know what I mean, because I'm playing the long game, not the short game, if you know what I mean. So yeah, 15-minute time frame, look for my entries, if you know what I mean. So entries and look for candlesticks that are good. But day time frame are good for and for put candlesticks good to daily time frame, like dodge it. On daily time frame, the candlesticks are very good because they are very precise and they're very accurate in daily time frame, if you know what I mean. I see this daily time frame, you can see this candle here. You see this candlestick. Okay, let me try and draw it because sometimes people don't really see what's going on, if you know what I mean. So you can see this is a candlestick, this is something here, you know. This candle here is very, very powerful. Why? Because it's a candle indicate and daytime frame again, higher time frames again. What the market went up, market test here. But this one is a long game because I be patient for a couple of days before even come and retest. And this is for most of swing traders. If you're a swing trader, good for you, you know. So it comes and retest here and moving up, you know. So daytime are very good for candlesticks patterns, if you know what I mean. Just one of the formations. Then add your trading lines, you train, look for chart patterns or the way is best for you, if you know what I mean. Like me, like this, I'm actually somebody how to trade forex, but end of the day, has to bring your own style of trading forex because you know how to live his life and his life gonna move according to the way he's trading, if you know what I mean. Yes, guys. So really now I'm always know I don't use indicators, just pure price action, smart money concepts, liquidity. In fact, bro, the I'm trading now is different, if you know what I mean. And trying to tell you I'm on a buy on Euro JPY, if you know what I mean. I bought this trade yesterday night, so I'm waiting for it to reach its full potential. I'm going to make some money from this trade. You know, last time I talked about Euro USD, and Euro USD did something massive last year. Last time we spoke on the video. So right now, market can go up on Euro USD. But when I trade the currency, sometimes one wait, see what's Wagwan in the street. It might come here, give us like a sniper entry and move down, or just keep moving forward. It is what it is with these trades, man. With currencies, man. We just feel what the show us, if you know what I mean. So we should not like overcomplicate things. yeah, guys, I'm so happy for you guys who watching my videos, taking your time to follow me, and checking the candlesticks Bible and candlesticks patterns. Always remember that there is no wrong or right entry option. They both work great, but the screen time and experience, you were able to decide whether to trade aggressively or conservatively. So people are aggressive traders, some people are conservative traders, some people are just traders. But me, I'm a dominant trader. Either market is dominant, I'm dominant of the market as well. So we don't have time for consolidation. All the time we trade on trade lines, if you know what I mean. So guys, if you have any question, reach out to me on Instagram, because Instagram is a great platform in which you can reach out to people without meeting them and talking with them, if you know what I mean. So guys, make sure that you like this video, watch this video. And my Instagram is learn FX with F 12 EK underscore 677. That's my Instagram. So make sure you reach out to me, guys. Make sure that you take your time, learn this thing, because one day it's gonna pay off. Trust me, it's gonna pay off. So guys, I love talking with you guys. Take care. Enjoy your summer. Bye.